Welcome back to What Was That? Live from Noida and Bangalore, where Nitesh and I, Vineet, we discuss tech news, we discuss business news, we discuss the impact of it on the world in general and on India, sometimes, depending on how safe we feel in life. Nitesh, how is life?
I rewatched Rocket Singh Salesman of the Year this
How is
week.
it? Has it aged well?
It has aged really well. I loved it almost as much as I did the first time I saw it.
Nice.
The writing is fantastic. I love how Shimit Amin came, made three movies and fucked off. I love that. He
Which
made
were the others?
Ab Tak Chappan,
Huh.
this, and Chak De India.
Ah, yes. 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 Yes.
These are the only three movies on which he has a directing credit. He made a few ad films, collaborated on some other films, but these three are his as the sole director.
I like the fact that Chak De India managed to be like crazy patriotic and also understated. Like you don't see that in sports films, and you don't see that in Indian sports films. And even Rocket Singh, I think what I liked was like it's just so understated. It's never over the top.
Yeah.
Yeah, I should watch it again.
The reason I bring it up is since you asked, has it aged well? It was a product of its time. The movie itself is beautiful, the story it tells is beautiful. But I think it kind of captured an idealism and an optimism that would not resonate today. The
Yeah,
the central argument of the movie is that it's possible to be honest and do business in India,
yeah,
which wasn't true even then
yeah,
and isn't true even now. But it made you want to aspire to that. Is that part of the movie has is badly? I mean, it's not the movie's fault. It's just we've all moved on. Maybe we're more honest with each other, with ourselves now. I don't know. For whatever reason, I don't think that movie would get made today, and even if it did, I don't think it would do well. Not to say it did well then, it didn't, but it was like it's a movie that a lot of people have a soft corner for. Your face lit up when I mentioned the movie.
yeah, yeah. I remember loving the movie back then.
Yeah, I don't think it would resonate quite as much today, which made me sad when I
Yeah,
came to that conclusion.
yeah. I think we've lost some idealism within us.
We can always blame AI.
That's my story today.
Go for it.
Idealism and AI and I don't go together. For me, the I in AI is not idealism. It's a bit of a long story. And by the end of it, by the end of researching for it, I think I also had a theme for it. You've Everyone knows that classic financial wisdom, right? That in a gold rush, don't dig for gold, sell shovels and picks.
Yeah,
AI just seems like the logical endpoint where everyone is doing that. Nobody is digging for gold. Everyone is just selling shovels and picks all the way down, and there is no money in the gold itself. There is
that
no
doesn't
gold.
need to be.
The thing is, at some point, if the gold diggers are the gold diggers, if they are not making any money, if they're not finding any gold,
Hmm.
who do you end up selling the shovels to?
Okay, go on.
It is so. There's this as part of this research. I ended up on a cartoon shared on a Reddit thread in ChatGPT's forum, in the ChatGPT subreddit rather,
Hmm.
2 years ago. Like when everyone digs for gold, sell shovels, and Nvidia is selling shovels and smiling, right? And Microsoft is digging for gold, and Google is digging for gold, and Meta is digging for gold.
Hmm.
No, Microsoft is also trying to sell AI services to further businesses. And when I say further businesses, not even end users of AI, right? The businesses, the enterprises that will use AI, they are trying to, everyone is effectively trying to make revenue from your two or three companies that are actually making any AI revenue, which are OpenAI, which are Anthropic. Everybody else is too tiny to matter. And the figures that are being invested into selling shovels and picks
Hmm.
are so insanely out of whack That's my story. Let's get there.
Sure.
I will start with a case in point, which is Oracle, a company we have discussed before,
Yeah.
uh, which basically signed a crazy big deal in July, August with OpenAI, where OpenAI has committed to more than $300 billion of procuring AI compute from Oracle over the next let's say 5 to 6 years. Right. In which case, compute means that OpenAI is the one selling services to end users like us, whether we use it for business use cases or personal use cases.
Mm-hmm.
And they are basically the LLM on top using that compute. And they're using that compute to, so there's two forks here. One is training, which is compute used to train newer models. So GPT 5.2, 5.3, GPT-6, etc. And inference, which is what they spend on every query that I run, the thinking that goes into every query that I run. So
Yeah.
in a way, compute for training becomes, in a way, capex because it's an investment. You're the finance guy here. I'm just using it to simplify this concept in my brain.
Mm-hmm.
And compute for inference becomes opex. If I, as the consumer, am running a query, that is the compute that's gone into it, and that's gone. It's not leading to any, unless of course it is feeding back into training data, I'm sure, but still. So that is sort of the breakup in my head.
If I'm,
Oracle announced its results a couple of months ago.
yeah, sure. Okay.
Total revenue in the quarter was $16 billion,
Mm-hmm.
and remaining performance obligations, which is basically estimates of the contracts it has for future revenues,
Yeah.
$523 billion, up 438%.
Right.
This is a company that's already toppled over in terms of it. It's so lopsided. Okay, not toppled over, but I'm like,
Hmm?
so many trucks I see which are like, teetering over, overloaded. That, in my view, is Oracle right now.
Oh,
We've discussed before, it's already lost the share price bump that it saw after that announcement.
yeah.
Year to date, it's now, I think, neutral. Last last 1 year, it is still about 15-16% up, I think. But yeah, it's completely lost that bump.
Mm-hmm.
Like if we assume overall annual revenue at about $60 billion and remaining performance obligations of $523 billion in an area where it has no expertise because these are uncharted grounds, right? Compute is not an area that is traditionally Oracle's strong point. Uh, to get that revenue of $523 billion,
Mm-hmm.
it has committed to data center leases of $248 billion.
Naturally. Yeah.
And OpenAI is probably going to close this year at about 10 to 12, or let's say, let's be very generous, $15 billion of revenue. OpenAI is going to be spending, a company which has made a revenue, let's say, optimistic revenue of $15 billion in 2025, is going to spend 400 odd $1 billion on buying compute from Oracle, and Oracle has already committed to spending $250 billion for building out this compute capacity over the next few years.
Mm-hmm.
The end chain of this industry are 2 or 3 companies that have no money.
Yeah.
So just this lopsided nature of the industry has, this is not even a traditional bubble, because in traditional bubbles also there were, actually you would know more. How would you compare this facet of the end revenue being tiny as compared to the overall investment going? How does this compare to regular bubbles?
I would draw parallels to the dot-com bubble, not the 2008 GFC, because which was for completely different reasons. It was because there was hidden leverage in the system that people didn't see, and assumptions of volatility that didn't pan out. I'm newly refreshed on this topic because I just reread The Big Short, which what a great book.
I'm going to reread it again. I read it every 2 years. I'll read it again.
So good. I read it once, I think a couple of years after it came out, and I'm only just rereading it now. So with all the learning that I've had in the past 5 years, it it's a breeze. It's a very, very well written book. Explains complicated financial concepts really well. But anyways, I would be more comfortable drawing parallels with the dot com bust. And I know no two bubbles are the same, but they do tend to rhyme. And to my untrained eye, it looks like we're still in late 99. We haven't reached 2000 yet. Because the kind of consolidation and M&A activity and just crazy depravities that happened in the last few months of the dot com bubble were mad, even by today's standards. Like all these, the things that you're describing now, it seems tepid in comparison. Because
One point I'm going to come to, M&A itself is dying in this industry. There's not much M&A happening. Well, there was just a deal last week. Manus is being bought out by Facebook, but there's very little M&A happening, and
when
that's
that
tiny
article
figures.
came out, the first thing I did, Control F, Raj Thakre, no mention. I was really disappointed.
Ah, fair.
Yeah.
Yeah.
That's my dad joke for the episode.
This will be the first of many dad jokes to follow.
But anyway, so that's what characterized the dot com. So you had a time when any company that had dot com in its name could raise money. It was just the whole investing world had gone mad, right down to retail investors. That was the defining characteristic of the early stages of the bubble. And then towards the end, when new money stopped coming in, and the corporations started buying each other out, that was the end game then.
Oh, so we've already reached that step.
Okay, but you just
We get
said
there.
Vinay has slowed down.
Exactly. Well, investment has stopped. External
Huh.
investment.
Yeah,
Financing is slowing down. VC capital is slowing down.
correct. So there's still this that moment of there's still a glide path here. It won't stop it instantaneously. There's so much momentum behind it that it can still go on for quite a while before people realize that, oh, we ran out of fuel like 3 months ago, 4 months ago. And then it'll be almost like it would seem inevitable when it actually happens. But there is still that window of uncertainty, because when speaking for myself, I was too young during the dot com bust to even understand beyond the headlines that, okay, something has happened. So when you look back, you tend to see that clean linear. Okay, see, first this happened, then this happened, then this happened, because you have a timeline constructed with the benefit of hindsight, right? But actually, months passed between these things happening. Warren Buffett gave his famous speech at the Sun Valley conference, where he spoke to a room full of people who were completely invested in tech and told them, "You guys are screwed," pretty much. But the bust didn't happen for months after that either. Even after the probably the smartest guy in investing in the world said, "What the fuck are you guys doing?" Even then, the bubble still sustained for a few months
In
before
fact,
it
I'm just
collapsed.
gonna move on. In fact, I am going to take a strategic call that, like, I've done enough bubble doomerism this year, last year. I will just move on to the rest of the story, because otherwise, well, we're both old men yelling at clouds, uh, data clouds. So coming back to Oracle, sorry, I just cut you short right there, but I'm like, no, I've done enough bubble talk.
No, no worries. I'm just
Mm.
saying, it's this can go on for a lot longer than
Fair.
seems credible
Hmm.
to either of us. So, yeah.
Oracle, the other thing that's happening, their free cash flow for latest quarter was minus $13 billion on revenues of $16 billion
Sure.
for a
Yeah.
software company.
Yeah. Sure. It happens.
And for a software company that has been doing software forever and not compute really, their software revenues are falling, not just degrowing, they're falling. They fell 3% year on year in this last quarter. So therefore, Oracle is in trouble. They've banked their entire fortune on one company. And the problem with that, leave alone the risk that comes from 60 billion approximate versus 523 billion on the back of one customer. The problem is that customers not making too much money. Even if they grow really fast and really well, they're still tiny as compared to these commitments. Their gross margins on GPUs are 14%. We've had the depreciation and the utility comparisons right earlier this year. Well, last year, what am I doing? Last year, uh, hello 2026. They reported in November that the GB200 Nvidia racks that they had bought, the Nvidia GB200 racks that they had set up, had a
Mhm.
negative 100% gross margin because they have bought them, committed for them, and they haven't been able to monetize them yet.
Yeah.
We will come to this point
Right.
later.
What's the issue?
No issue, no issue. Negative 100% is a.
So, do they lack customers or data centers or power or
There is a huge setup cycle.
okay?
All these three things that you mentioned, they lack right now. There is
Right.
a chain that follows. I had CoreWeave somewhere in the process they follow.
So it's just long lead times, right?
Very long lead times for a product that where Nvidia releases a new version every year.
Yeah.
So by the time they'll set up, they'll be 2 to 3 years old, optimistically. Two
Mhm.
years is very optimistic. 3 years is more reasonable, and still I would say not pessimistic. 3 years is also reasonably middle ground. And that's 3 generations old by then. And they are not, you know, just replace the GPU, set up a new GPU in the same rack. There is so much custom hardware, custom everything that is required. And the power is not there. The customers, I will also come to that, are not there. They are way behind on even the physical setup. Remember Stargate?
I do.
So, vintage 2025, Jan 2025 announcement.
The good
Uh,
old days.
yeah, they are way behind on the data center setup for that. They committed to like 2 years would be the first few gigawatts of rollout. It's a year down, and they're saying they're 6 months behind, but it seems longer. So that is where Oracle stands as an example. We briefly discussed Disney investing $1 billion in OpenAI. I
Yeah.
want to sort of use that as a jumping point to say that these deals that are being announced, none of them is really worth much. None of them is really materializing into much money, much progress. Disney talked about $1 billion.
Mm-hmm.
That too, again, details are hazy. I'm seeing multiple versions floating around, but that too is not really, I don't know if it's cash, if it's $1 billion in cash. Now,
Right.
all these other agreements that people have when, Microsoft invests or Amazon invests, at least there is compute, right, that these companies can use. What can Disney give OpenAI that actually makes OpenAI's life materially better? They're giving IP. Sure. You can, again, like we discussed last time, we don't really know what Disney is getting and what OpenAI is getting out of it practically in the short term. Long term, sure, maybe.
Mm-hmm.
But in the short term, so I'll take another example. This is from October. OpenAI and Broadcom announced a strategic collaboration to deploy 10 gigawatts of OpenAI designed AI accelerators. OpenAI designed AI accelerators. That's a great term. Broadcom is a company that is also setting up uh, data centers, right? Deploying racks to sell compute eventually.
Yeah.
$10 billion. Now I am going to read out of their. I'm going to get wonky today. Did a ton of research. My favorite Ed Zetron, of course, has done like crazy amounts. But there's a ton from Wall Street Journal, Fortune, etc., wherever I could figure out life behind a paywall.
Mm-hmm.
This is from Broadcom's earnings call. And I'll give context that before this question, a reporter had asked, by the way, when are you seeing OpenAI revenue coming in and how much?
Yeah.
And the guy just waltzed around all over the world and did not answer that question. Next guy, hey, Hawk, I wanted to ask, I'm not sure if the last caller said something on it. I didn't hear it in the answer. We wanted to ask about the OpenAI contract that is supposed to start in the second half of the year and go through 2029 for 10 gigawatts.
Yeah.
Right. I was just wondering if you're still confident in that being a major driver. Any obstacles do you see, and when do you expect, and how much do you expect that to contribute, and your confidence?
Nice.
And the guy answers, you didn't hear that answer from my last caller because I did not answer it. I am not answering it either. The fifth customer, he was talking about another customer, is somebody else. That's a real customer. Don't worry, he will grow. Let's leave it at that. That's real confidence boosting, right? As far as the OpenAI view that you have, we appreciate the fact that it is a multi-year journey that will run through 2029, as our press release showed. When you're referencing a press release and an earnings call, you read earnings calls and listen to them much more than I do. I don't really. Is that a confidence booster when you have to refer back to a press release as a
Not
data
only
point?
that, I mean, obviously that's like a shining red flag, but even just any anybody from management saying trust me bro for anything.
It's a real customer.
No, no, no,
Yeah.
no, no, no. you you just say no and get
Yeah.
out. That's it.
That will run through 2029 as a press release with OpenAI showed 10 gigawatts between 26 to more like 27, 28, 29. Not 26, it's more like 27, 28, 29.
Yeah.
Abhi mat pusho, right? And
Yeah.
and I call it an agreement and alignment. That's always confidence building,
Hmm.
right? It's an alignment. A contract nahi hai, alignment hai. Uh, we do not expect much in 2026. AMD, right? We've discussed AMD before. Also, there was an announcement with OpenAI, which allegedly involves OpenAI bringing in tens of billions of dollars of annual revenue to AMD, right? And it gave OpenAI AMD stock the right to get AMD stock as the conversation and the contract progressed, right? Which is really
Right.
amazing. On their recent earnings call, the CEO did say we announced a comprehensive multi-year agreement to deploy 6 gigawatts of GPUs,
Mhm.
with the first gigawatt scheduled to start coming online in the second half of 2026. Okay. But if you dig into the numbers, which again, I did not, but a bunch of people have, so I'm just quoting from them. In their 10Q filing, they say remaining performance obligations under contract are $280 million, of which $140 million is expected to be recognized in the next 12 months. So therefore, they are just not accounting for this money at all anywhere in their actual filings, in their actual projections. So more press releases. So yeah, that was the point. There are more examples also, but I just want to bring out these two that most of these announcements are just announcements. None of these are actually leading to solid revenue or growth in the short term. Thoughts before I move on?
Announcements usually don't get you sued, so that makes sense. But one contra argument: earnings calls in general, management has to be over optimistic. That's their job. That's the role they're performing there.
Hmm.
So that alone, I wouldn't hold against them. But
Over optimistic or over pessimistic? Because on the earnings calls, they're not really saying much.
yeah, no,
They're deferring to the press release.
in saying that the quarter that we just had was like a confluence of the most improbable, weird one-off tail events happening, but
Hmm.
a turnaround is just around the corner. It's just wait, just one more quarter. That is a common theme for earnings calls, for micro caps to ultra large caps.
Fair.
Unless they are like on a pure rent seeking model that we don't do anything, hum baithe hai, every month we get a royalty check. Those promoters don't give a fuck about anything, but everybody else tends to be really optimistic about what's coming around the corner. That's their job in earnings calls. So that alone I wouldn't hold against them. But if you need to have some sort of uh, backup with numbers. If
And
not,
again, I would say my point here still comes back to what I was saying about Oracle, that the projections or if the company is making $6 billion in annual revenue and they're talking about $2 billion or $3 billion of forward-looking contracts or
Mhm.
alignments, fine. It is still, I would say,
Believable.
high risk, still too
Yeah.
high risk, still believable.
Yeah.
Here, The alignments are dwarfing the actual
Yeah.
clear-cut revenue. And in Oracle's case, it's even more dangerous because yes, there is a commitment there, but again, the numbers are just completely out of whack, and that puts Oracle in a much more dangerous situation.
Yeah. Especially since their core business seems to be shrinking, right?
Which could also be a blip, but again, they don't have that experience in compute build out. They are
Yeah.
a software company. Next point is the demand for compute. Again, coming from the theme that what the end customer is demanding is very different from what these guys are sort of building out for.
Mm-hmm.
So everyone's been saying, like Google has been saying, Sundar Pichai in November was saying that when VO launched, it was very exciting. VO is their video generation tool. If we could have given it to more people in Gemini, we would have gotten more users, but we are at a compute constraint. Sure. JP
Okay.
Morgan is saying that demand is exploding. Google is saying Google's AI infrastructure head is saying that it must double capacity every 6 months to meet demand.
Mm-hmm.
Nvidia is saying that its AI chips are always constantly sold out. But there are enough people who have done research. This basically this guy Dario can link to he writes a lot on Twitter. Michael Burry has now gotten into the fray. There's these other couple of guys who are finding compute availability online fairly easily, including on the latest chips that are actually out in the market. And Nvidia has stepped in to sign deals to buy unused capacity from CoreWeave, from Lambda, which is really funny. If demand is exploding, then why is Nvidia, the manufacturer of the chips, the only company actually making money out of the whole wave right now?
Mm-hmm.
Why are they stepping in and saying, "Oh, we'll buy any unused capacity you have," to the tune of billions of dollars?
That sounds suspiciously like a backstop.
These are to the tune of like 5 to 8 billion dollars. These deals.
Yeah. So
So
it's nice that Nvidia is able to wear so many hats at once. No? Sometimes they wear the supplier hat, sometimes they're wearing the investor hat, sometimes they're wearing the customer hat.
hmm,
It's very convenient.
all in
And
the same transaction, all in the same, not same transaction, but the same customer, whatever
circle jerk is the word
circle.
you're looking for.
A circle jerk with a very very short circle, a very small circle. Yeah.
So,
So. Mhm.
uh, are you saying this is an emperor has no clothes situation and is just waiting to see who the first one is to point it out?
I am not going to be a doomer. Today is all about talking about numbers and
All
facts
right.
and people.
All right, keep going then.
Let's see how long I can last. Uh,
That's
yes, here
what
again.
said. No, sorry, go on.
Yeah, I will not say anything.
Sorry,
I
go
am the picture of restraint today, as you can see. Yeah, again, coming back to the theme that the revenue side is extremely thin, right? In more ways than one. Not just in terms of actual numbers, but in terms of the number of customers also. One customer accounted for 67% of CoreWeave's revenue, and four customers overall accounted for 87% of CoreWeave's revenue, outstanding revenue. And again, CoreWeave we've discussed before. CoreWeave is again one of the compute sellers building out data centers, etc., etc.
Yeah.
Their quarterly revenue, their annual revenue is somewhat $5 to $6 billion.
Hmm.
Small, small player. Like these are small numbers when compared to the figures we keep hearing with Meta, Google, Amazon, Microsoft, of course. Meta, Google, Amazon, Microsoft have apparently in 2026 financial year expected total spend is north of $450 billion capex.
Hmm.
So therefore, as a relation to that, the actual numbers from the guys and from everyone other than these four and the numbers that Nvidia throws out are actually tiny. And CoreWeave is one of the bigger players in this space right now. If you look at Nebius, which is another cloud compute company looking at major AI revenues, there's 5 or 6 names that keep coming up, and this is one of them. Their 2025 revenues, quarterly revenues were $150 million. 9 months ending the September quarter, $300 million. tiny numbers,
Some change. Yeah.
chump change. So yeah, the giants in the room are these four guys. China is expected to have spent, or estimated in this financial year, will have spent about 50 odd billion dollars. And these four companies, Google, Microsoft, Amazon, Meta, are at about 450 billion by Bloomberg estimates, not Bloomberg estimates, JP Morgan estimates.
Mm-hmm.
And going by Microsoft earnings reports, what little they have shared in terms of what they claw back from OpenAI, from their ownership, OpenAI is likely to end the year at about 10 to 12 billion. Anthropic is likely to end the year at about, optimistically, 7 to 8 billion
That's revenues?
revenues.
Okay. All right.
So yeah, these are the customers at the end of the chain who are actually selling AI to end users.
Yeah.
Tiny, like Salesforce, right, has Mark Benioff. One thing he cannot do is not talk about stuff. He loves talking about. He loves talking, right? He's been all over Agent Force, which is their AI product.
Mm-hmm.
Their recent earnings call said they're on track to make about, I think, $1.4 billion in AI revenue. So, sure, great. But yeah, these three big users collectively were talking like 15 to $18 billion in revenue combined. So, next point is funding is going to dry up soon. A bunch of the financiers have started pulling out. Blue Owl is a very big financer
Yeah.
in the AI space, data center space. They put $3 billion in their of capital into Meta's Hyperion data center, $3 billion into OpenAI's Target deal.
Mm-hmm.
Uh, well, more. Collectively, I think $5 to $7 billion in Stargate across multiple projects.
Right.
Another $7 billion loan to Crusoe, which is another data center company, infrastructure company. They all sort of meld in between. Are they building out the buildings and the racks, etc., or are they buying GPUs? Right. It gets a little bit meshed up in my head. So Blue Owl, they are now trying to pull out. Well, they have said they have pulled out of a Michigan data center deal between Oracle and OpenAI, as per FT. If they have started to pull out, that is a that is a bad thing that's happening because they are the biggest guys on the
Yeah.
financing side. Oracle is now.
Did they give an explanation?
Let me see. No, I think I ran into a paywall before I could get to their statement part of the Financial Times story. So that's my life these days, paywalls. Oracle is now delaying, they're revising delivery schedules for several of their data centers. So bunch of Stargate data centers are now delayed. Now they are saying, no, don't worry, everything is still on track despite these delays. They would say that, right? And they're not really giving the reasons. But if funding is drying up and the financiers are pulling out, and the broader theme being these are software companies getting into very complicated hardware, like massive scale hardware, where again customers are very different. The power doesn't exist, the power that they need, right? So yeah, and just different companies at huge scale coming together. Continuing on the funding side, data center money is running out. Investors are dumping Oracle.
The
Yes,
Yeah.
yes. There is a story from CNBC. SoftBank's Son, Masayoshi Son, was crying about the firm's need to sell its Nvidia stake. It's in the headline. He was crying. They had to sell their Nvidia stake to finance their OpenAI commitment.
Yeah.
So yeah, SoftBank is supposed to send OpenAI $20 billion plus before the end of the year,
Mm-hmm.
of which six they've raised by selling Nvidia stake. Uh, this was contingent on OpenAI converting into a for-profit, and they seem to have done that somehow. So now SoftBank owes a lot of money to OpenAI, which they are trying to figure where they will get from. This is a really interesting story by this other guy, Dario, that I mentioned earlier.
Just a second, let me interject.
Yeah.
That sounds so funny because SoftBank is the venture fund, right? Normally, the venture funds put out capital calls to their investors, and the investors have to pony up, or there are severe financial consequences for it. Even if it means that the investor has to get out of a better investment, when they have a commitment, they have to pay down the capital call. SoftBank is getting capital called by OpenAI, a portfolio company.
And SoftBank is selling its stake in a company that is whose stock is still very high up.
Yeah.
Right. Maybe it's a good sale in that sense, right? Maybe this is all just PR that they think that Nvidia has peaked. But if they think Nvidia has peaked, then that means they would think that the AI bubble is sort of plateauing, in which case, why would they want to put $20 billion into OpenAI? So,
Funny.
so this is you will find this interesting. SoftBank Group transferred the right to invest in OpenAI to Vision Fund 2, where 96% of the committed capital belongs to SoftBank Group itself.
Yeah.
In doing so, SoftBank Group created a forward agreement between itself and its own fund
Mm-hmm.
that hasn't yet invested that $22.5 billion at the $300 billion valuation agreed in March.
Mm-hmm.
However, this forward contract allowed SoftBank to already report an $8 billion capital gain prior to even closing the investment.
Mm. Yeah. Why not?
Why not? I understood half of that, but it just sounds jugglery to me. So I don't. When you say why not, I don't even know if you're being sarky or because this happens all the time. Standard operating procedure.
SoftBank is listed, so that adds the masala there, and they're doing mark to market on a private investment, which you can do at whatever number you want. Because how are you going to verify that, right? So I'm not saying that's what Masa did, but public companies do this when they have a consensus from the street of here's what we think the EPS, the earnings per share, is going to be of this company, and the company realizes that there's a pretty significant gap. They tend to look for places from where they can uncover. There's no actual money or profit coming in. They tend to look for places where they can uncover that missing chunk of earnings that they can push to the EPS, because the immediate reaction from the street comes from here's the consensus EPS and here's what the company has reported. Better, higher, stock go up. Lower, worse, stock go down. That's always the first reaction. And a more nuanced, deeper reaction from the market unfolds over the next few hours, days, weeks, and months of what actually happened. But the headline number is the EPS. And so public companies all over the world, unfortunately, do these kinds of things if they want to hit a particular EPS number. It's unsustainable. It's if you take that to its logical conclusion, you become Ramlinga Raju. So that's one extreme. The other extreme is something happened this quarter. Let's just get it over with. But that's how it starts. It's a very slippery slope, and all public companies are somewhere on that slope.
So it does actually happen.
Yeah.
I still don't know if you were being sarcastic or not, but I figured somewhere in the middle, a bit of both.
Not nice, but common enough. And here, Masa does not even need to like get some land parcels that were sitting on the balance sheet revalued to say that hey, we have so much money and therefore we are fine, everything is fine. Or
In one way, it is legit, right? He has committed in March to investing at a certain value.
yeah,
The value of that company has theoretically, according to certain reports, risen.
that's
So
where the
even though the money hasn't gone in yet, well, the profit is the
that's where
gain
the
is there.
business happens. No, in a public company, you can just look up the stock price. You and I can look up the stock price, multiply it by the number of shares outstanding, and say this is the value of the company. This is what we invested at. Therefore, this is our capital gain or loss. In a private company, who knows? And one with as opaque fundraising model as OpenAI,
Yeah.
any number that you pull out of your ass, you can defend. So not good. No, not good. Common
The
enough, but not good.
the last point on funding is that FT has reported that Deutsche Bank, which has backed a bunch of AI things like data centers, won't
Mhm.
be even included, was exploring ways to hedge its exposure to data centers, exploring many ways, including shorting a basket of AI related stocks.
Interesting. So this level of financialization did not exist in the .com bubble.
Morgan Stanley is considering synthetic risk transfers on loans to businesses involved in AI infrastructure. What is a synthetic risk transfer? Is it a is it a
Derivative,
uh, is it a CDS? Is what is it? What is a synthetic bank transfer?
derivatives, basically. They're going to create uh, instruments that mimic a real life loan or a real life an actual stock, but without any money being lent out. Or they recreate in a lab an instrument that behaves exactly like the real thing would. That's the synthetic part. It's man made. It's not natural. And oh, just that word should raise the hair on the back of your neck. It is never a good thing. Because it's usually trying to solve a problem that could not be solved any other way, and it's usually a band-aid. And the problem with synthetic securities is that they behave like the underlying or the thing they're trying to mimic most of the time, but not all the time. So in the edge cases, during tail events, everything goes to hell. That's if you had to summarize 2008 in one paragraph, that is it.
Yeah,
That's
so I didn't know what this meant. In fact, I didn't even point out that even Deutsche Bank is considering synthetic risk transfers.
yeah,
So both these banks. Uh,
dangerous stuff. It means that the market for the thing itself is illiquid for whatever reason, and so we're going to create these Frankenstein instruments in a
I did
lab.
not understand this term when I read it, but immediately the phrase that came to mind was collateralized debt obligation.
Yeah, CDOs. Yeah, yeah. Oh man, I'm so glad I read The Big Short in preparation
Mm.
for this episode. Serendipity, but yeah, not.
And Margot Robbie explaining synthetic risk.
Yeah, if I'd known, I would have sat in a bathtub, man. Fuck.
Next time, next episode. So now I will move on from the funding risk part to very quickly talk about depreciation risk, which we have briefly discussed before, but just wanted to highlight how strong this risk is that banks, I am now directly quoting Ed Zitron, every single major bank and financial institution has piled hundreds of millions, if not billions of dollars into building data centers that take forever to even start generating money, at which point they only seem to lose it. Meanwhile, Nvidia is selling GPUs on a 1 year upgrade cycle, which means that all those data centers that are being built right now are
Mhm.
being built to be filled with Blackwell chips.
Yeah.
And by the time they turn on, Nvidia will be selling its next generation Vera Rubin chips. And that is optimistic if that they will go live because Vera Rubin is next year's
Yeah.
upgrade cycle. And Nvidia is saying that Vera Rubin can use the same racks as Blackwell, maybe. But Nvidia has also said that they will shift to a different kind of rack, like Kyber racks in 2027. So all those data centers are going to be full of racks incompatible for what is coming in 2 years. Uh, Remember we discussed that TCS is on a good tangent building data centers.
Yeah.
There is a huge risk factor here. The more I read, the more I realize there's a huge risk factor for them also. They're not immune to this.
Hmm.
So yeah, another example, the like Stargate Abilene, which is one of the Stargate announcements, uh, already delayed. JP Morgan, Blue Owl, and a couple of other banks invested into this. Heavily delayed, won't be ready until the end of 2026 at the earliest. Is being made with GB200 racks, which are already 2 years old.
Has Target put anything out into the market? Do they have revenue?
No, Target
No.
hasn't even like nothing, nothing.
They are
It's a data
pre-developed.
center project where nothing has gone live.
Yeah, interesting.
So yeah, so by the time they go live, they will be on obsolete infrastructure, obsolete compute infrastructure, which is their product. So very quick point on capex versus opex. Right.
Mhm.
These companies are now saying, and a bunch of estimates are coming out, that 70 to 90% of compute for AI is used for inference and not training. As I said earlier, training is what you're using as an investment to build new models. Inference is what is being used on a per transaction basis. So if I'm running a query,
Right.
inference compute is being used. If 70 to 90% of all compute, which is the prime currency that these companies are leveraging, if OpenAI, Anthropic, etc., the LLMs are using 70 to 90% of all compute power for inference, then that means that there is no real economy of scale. That means that they're really not going to be recovering money that, oh, as our customer base grows, there will be economies that come in and we will then, stop hemorrhaging. Right. We will use less compute as we grow, or it will become more, less compute per user at least.
Right.
These companies are famously losing money on every user right now. Free users, obviously, they're losing money. But also, they're losing money on their premium users, the $200 a month power users. They're still losing money on that also. And these guys have said it a bunch of times early in the year. And they haven't ever come back and said that, okay, now we have hit break even on our $200 a month users. So,
Wait,
if
one second, one second. We kind of glossed over something that I would like to clarify for
yes,
our audience. What Vineet is saying is, if let's say 70% of compute was being used for training and 30% was being used for inference, the inverse of what is happening now, then the argument could be made that as the models get better and better, that 70% part, once the model is trained well enough, let's say, can go away or shrink drastically, whereas that 30% bit is probably going to stay the same, right? Or
yeah,
might even come down a little as the models get better.
yeah. So it's like fixed cost versus
Huh. No, it's
operating cost,
like
right?
R&D versus
Hmm.
OpEx.
Yeah,
That's the clearest example of this, because CapEx is not the best way of looking at this. It's something
right.
in between, and R&D is exactly that, right? If you consider that training data is R&D cost towards making your model better, then one day
Hmm.
it goes away practically, and you're left with the finished product, let's say.
Where my cost per user is crazy low.
Yeah, and your revenues stay the same or go
Hmm.
up, and therefore that hockey stick kicks in, and you get wild profitability. But if it is the other way around, which is what Vineet is pointing out, then you're going to have the same low margins in perpetuity, because only 20 or 30% of your cost might one day go away or become smaller. Whereas
And
the rest,
as your users become more involved with your product and they use it more, which is what these companies are trying to improve on right now, right? Engagement rate and
yeah, yeah,
active minutes spent on an app, you will spend more. So there are negative economies of scale.
yeah.
As you grow, more users come in, right?
Your margins are going to get worse, not better.
Which is my theory, that which is also why blockchain never really took off, because every additional data point in your blockchain database
Hmm.
means you are going to be spending more on compute to process that transaction. They get more complicated as they grow. It's not like the typical large business where economies of scale kick in at some point and your fixed costs don't grow at the same per user
As
level,
revenues, yeah,
yeah, as revenues,
and the
right?
rest flows to your bottom line. That's yeah.
So there are negative
Go on.
economies of scale here also, which is very, very dangerous. We are
Yeah.
still living in the hope, the industry seems to be living in the hope that at some point this will reverse.
Hmm.
But if inference costs, the per transaction query compute cost is 70 to 90% of overall compute, that is crazy dangerous.
Yeah. Well, I think we did a good job of illustrating that. Back to what you were saying.
Yes, thank you for simplifying that actually. It helped me also. So yeah, that's the only point I'll make on the training versus inference part. That this is a danger. This is a huge danger. It's not getting better. It seems to be getting worse. Anthropic is just as bad as OpenAI. Like everyone just keeps discussing OpenAI. Well, you could say there's so many industries where there's a first mover disadvantage, right? They're like paving the way for next person to be better, to
The
learn from the first
second
person's
the
mistakes.
second mouse gets the cheese.
Mm,
Yeah. Go
yeah,
on.
but here the second mouse is also
Getting clobbered.
yeah. They've agreed to purchase $30 billion of Azure Compute. Azure is Microsoft's cloud service.
Mhm.
It's agreed to spend $10s of billions, tens of billions of dollars. That's amazingly specific with Google Cloud. It's ordered $10 billion in chips from Broadcom earlier in the year. It's placed apparently another $11 billion in its last fiscal quarter with Broadcom. Ed Zitron again. I have mentioned his name now 5 times already, I think, if not 6. He did this fantastic deep dive into what Anthropic is spending on Amazon Web Services and estimated that they would have spent like a few $1 billion, $5 to $7 billion there on top of total revenues that optimistically will land up at like $7 to $8 billion in the year. So they're just OpenAI on a slightly smaller scale. There's no third mover who seems to be doing better. Perplexity, no. Perplexity is not even it's built on top of others. Which brings me back to the point I was making earlier in the year that the wrappers that are built on top of these LLMs are not making money. The LLMs are not making money.
Mhm.
The compute providers are not making money. The data centers are not making money. So the picks and shovel guys are all losing money at every step of the chain except
Everyone except
Nvidia at the back.
Nvidia.
And Nvidia is doing a lot of jugglery to sustain the industry.
Yeah.
You'll notice I did not call it a bubble. No opinions.
I admire the restraint. Where does Google fit into all this? Because they are different from these companies, right? They have their own cash machine.
Google has their own cash machine. Yes, it has a lot of reserves.
Hmm.
It has its own chips that seem to be much more efficient. But Google is also part of that $450 billion of spending from these four companies, right? This is still uncharted territory for all these companies because, as we've discussed often, these are software companies used to crazy huge free cash flows, not used to capex at any level that is even close, remotely proportionate to what they're doing these days
Hmm.
in an industry that is becoming very commoditized at every level.
Right.
So I will still come back to, in fact, for Google, because they're the company that more than anyone else seems to have owned the customer for so many years, right? Crazy, like 93% market share for Google search.
Hmm.
Let's come to the customer part. Like, what is the use case? Who is actually paying for these services? Nobody is reporting AI revenue separately, right? Agent Force, Salesforce's AI product, sure, but that is an ARR, estimated ARR of $1.4 billion. So chump change, right? So not even worth, not even a blip in the against these figures.
Hmm.
Microsoft start of the year was saying that they're on like some going to make some 13, 14, $15 billion of AI revenue. That is not end user AI revenue. That includes the compute they are notionally selling to OpenAI,
Yeah.
right? So we know that there's a $8 to $10 billion of notional Azure usage they're giving to OpenAI. So customer revenue from AI is Microsoft also is not more than $2 to $3 billion, right? Estimated. They're not releasing any figures, so these are all wild estimates.
Yeah.
Uh, Nothing. That's nothing, right? And also, as a user, as a guy running a startup and using Microsoft products, I can't go buy an AI product from Microsoft. It is all bundles, right? And now I can't switch off Copilot even if I want to, and I still don't know what it does, but it's everywhere. So I don't know, like from the 145 rupees a month per user that I pay Microsoft, how much is being attributed to Copilot revenue, to AI revenue.
Yeah.
So everything is blurry, everything is mixed up. How, and same with Gemini, Google's AI LLM product, right? I
Mhm.
can spend money on buying Gemini, so that would count as AI revenue, but everything is bundled. If I buy Gemini, I am getting Gmail space, I'm getting 2 TB of space. In fact, from my Geo number, I just got like 18 months of free Gemini Pro.
Yeah.
Are they doing the old, Indian D2C trick of passing it off as a discount, as a marketing expense, and just counting it as AI revenue? I have no idea. Nobody has any idea. They're not
Mhm.
revealing these figures. So the customer appetite to actually pay for any of these services is unknown, which is where the only way we can see anything is through Anthropic and OpenAI, which also are not public,
Right.
but at least they are giving out their ARR estimates.
And they are pure play in that this is all they do. Yeah, makes
Good
sense.
point. Good point. That is actual AI revenue without being mixed up or bundled up with other things. Yeah, exactly that. Satya Nadella is saying that he wants Microsoft executives to embrace AI or step aside. That's how you know your product is so damn good. You need to force your employees to use it or you will fire them.
Beatings will continue until morale improves.
Exactly.
Nice.
Meanwhile, you are very online, so you've been seeing what's been happening with Grok. For our readers who are
No
blissfully
comment.
unaware, I envy you firstly. Grok is Twitter's AI product. In some ways, it seems blazingly, it's smart. It is very smart. It sounds human. They put out an update earlier in this year, which just blew my mind. Like, how is this even possible? Like, here also is AI, like actually Indian sitting at the back. But real time responses in human language across multiple languages, giving subjective answers also. This is where Grok differs from everybody else, where uh, I will not get into politics, but people are putting up photos of multiple political leaders and saying, Grok, please remove the most corrupt leader from among these. And it gives an answer. And yeah, it's been doing that. And it's very quick and very efficient and very good at changing photos, which has led to this latest update where people are requesting it to commit sexual abuse by asking Grok to undress women in photo responses. And Grok is doing that. That is what AI is being used for. France has basically now reported this content to its own prosecutors.
Mhm.
India, the Ministry of Electronics and Information Technology, has issued a formal notice
Yeah.
about this. The government has raised concerns over I'm reading out from a PTI tweet. The government has raised concerns over the misuse of the platform's AI tool, Grok, to generate and circulate obscene, sexually explicit, and derogatory content, particularly targeting women and children. And the ministry has directed X to immediately review this, remove all unlawful content, and take action and submit an action taken report within 72 hours. That's how serious this is. I'm guessing every country in the world is going to follow because this has gone way beyond any kind of regular tech tech bro type shit. This is the stuff that AI is being used for. It's a farce. It's a joke, and it's not being monetized. So yeah, the use case is not really monetizable use cases. I'm going to now pull back to the rest of the conversation and leave this chapter aside. But
Wait,
yeah, the
I
monetizable use case.
I
Hmm.
have an observation. You can chop this part out if it
Hmm.
doesn't work. The history of the internet, most tech developments have happened because of the porn industry,
No, I would disagree. They haven't happened because of the porn industry. The porn industry has been an early adopter of most new tech.
which becomes self-fulfilling, right?
I
Like,
wouldn't necessarily say that. Like if you're talking about video standards, like whatever
Streaming,
Betamax, whatever it is, right?
streaming, data centers,
Hmm.
all of those were pioneered by.
I don't think so. I think that is also overstated
Hmm.
because really Pornhub has not brought up the internet by itself. Sure, they are early adopters,
Right.
but I don't think the money in it is big enough. I will have to probably go into the back of my head and do a lot of research to back up my thoughts here. No, not that kind of research, Nitesh. But I don't think the
That's
money is big enough that every new tech is sustained and held afloat till the rest of the world picks it up because of porn.
okay. Well, we both haven't done research on this, so let's. It's a fun assignment. Let's one of us do that. And
Not on Twitter, please.
better you than me.
I will probably just end there on that final note of the consumer money is just not there. It's a gimmick. Like it brings me back to that Studio Ghibli thing we discussed, which still holds true. That great, it became a moment on the internet. But what will people pay for that? Probably
What about
nothing.
enterprise?
Enterprises are not paying for it. Not enough, right? Again, the two biggest, most visible companies, Claude has a coding product that is considered legendary. It
Yeah.
is like Claude Code gets so much respect in the industry. My co-founder uses it a fair bit. But again, where are the revenues? If Claude Code is so damn good, why are people, enterprises, not paying for it? We pay for it. We are on $100 a month plan for my startup, right? But overall, if they were getting into that 20, 30, $40 billion revenue rate, they would have told us by now. They're not.
Hmm.
So if despite having such a path breaking product, the revenues are not there, then yeah, where are these enterprises? Why aren't they paying for it? So then I have to assume that the market is not there. Is the market waiting for the product to get better? Then they'll start using it.
Hmm.
What does better even mean? Like perfect at coding, what does that even mean? And what will these same customers then pay 5x, 10x, 20x for it? Or will 5x the number of customers step in to start using it? Even then, given the figures we're talking, and we've discussed that they need like a trillion and a half of revenue in the next few years to sort of justify what is going on in the name of these spends. And yeah, the enterprise users are also just not there.
Would would you? How do you feel about the premise that AI or AI models or AI usage will become like an email address?
Elaborate.
In that there was a time when it first came out and people wondered what use could this possibly serve,
Hmm.
and then right now they're indispensable. Even the smallest business in the most obscure corner of the world has an
How much
email
do you
address.
pay for email?
Fair point. If email were to become paid, how many people do you think will stop using it?
I, in fact, I would put it another way. If it becomes paid, enough people will come up with a wrapper on top of it
Hmm.
and bring and commoditize it to the level that email has become commoditized. I pay for email, right? But there's enough free options. I pay at the enterprise level because I get email, I get Teams, I get like a
Yeah,
bunch of things from Microsoft. I get OneDrive for that 145 rupees a month per user, which is tiny.
but if it was just email, you probably wouldn't be so happy
I
paying
like,
even like
yeah,
$10 a month, right?
I don't know. It's hypothetical. But yeah. So for example, let's look at it this way: Zoom is a far better product than Teams,
Yeah.
right? I don't even think that's subjective. It is an objective fact. I don't pay for Zoom.
Right.
It's like $20 a month.
Hmm.
Now they are trying to bundle other things. They are trying to add workspace features, chat, etc., to justify corporates moving to them. But I am using a far worse product
Hmm.
because it's cheaper and is bundled.
Bundle. Yeah.
Are these companies going to become so much better that they can differentiate themselves and justify a price premium? I think enough people in the world, not just India, are not going to pay for it.
Hmm.
They'll take whatever commoditized crap is out there. I don't mean you teams. Actually, I do. So yeah,
Fair. Anything else? I have a nice closing for you.
I just last was we were talking about AGI, ASI. What is ASI is now? I think artificial super intelligence.
I thought you were talking about the Archaeological Survey of India.
Uh
And
no,
I
let's
was
not go
saying, stick to AI, man. It's less controversial. Stick to AI.
there. Yeah, I'm not even going to say anything about that ASI. But yeah, that chatter has stopped. Everything has stopped. Sam Altman, when GPT-3 first came out, in 22, I remember this chat he was having, and he was like, "Oh, we don't really have a clear business model yet, but what we're going to do is we'll develop AGI, and we'll ask that AGI what is the best business model for OpenAI."
Yeah,
You lots of laughter. So we need AGI to solve this problem, and AGI is not coming. That is the whole problem, actually. Yeah,
interesting.
I'm done.
So, to summarize your incredible research, did you see the video of people who gathered at a vantage point of the Brooklyn Bridge and waited for New Year's? Because rumor was that there's going to be fireworks on TikTok and everywhere else. And midnight came and the fireworks never happened and they turned around and went home. Great metaphor.
It's time to turn around and go home, maybe.
Oh man, that was so funny. All right, that's it. I think we can just leave it there.
Huh, I think we can leave it there. I like that. I have like it's gone into multiple areas, and I do feel that I have covered enough aspects. I don't think I've missed out any obvious areas, any obvious questions that नहीं ये तो सोचा ही नहीं यहाँ से आएगा.
Hmm.
What do you
My
say?
my biggest takeaway was the financing firm Blue Owl. Blue Owl pulling out is terrifying. They're right at the center of most of the deals. So for them to say, okay, we've had enough, not a good sign.
And the synthetic risk transfers.
Oh yeah, that is just like, in the 2010s, all Hollywood movie had that trope of the beam going up into the sky, and this is like that. It's like a big red flare being shot up,
Oh,
synthetic. Yeah.
that bad, huh?
Oh,
Hmm.
not good, not good, not good.
Okay then. Yeah, that was it for my story. Thanks, Sidesh, and thank you guys for tuning in. We will see you next week.
That was fun. Just one last thing, which I just remembered, but I wanted to say up top. Have you heard of Chitra Santhe?
No.
So there's this art college in Bangalore called Chitrakala Parishad, storied, old school, an actual college where you can go and get a fine arts degree and a master's and I don't know what else. It's in a lovely heritage building, and tomorrow, once a year, they shut down the road in front of the college and they shut down all access roads to the college, and for like a 1 kilometer stretch there's no vehicle movements allowed on one Sunday, and there are just stalls set up by artists, so you can go and look at 20,000 paintings and artworks done by artists. While the artists are there, you can interact with them, you can buy artwork, and that's tomorrow, and I'm really really excited for it. I
Wow.
go every year. It is the high point of the art calendar of Bangalore.
Oh, that is amazing.
Really, really looking
Wish I were
forward to
there.
it. Look
This
it
sounds
up.
like fun.
Look up pictures
Hmm.
online. So you can see artists evolving, because if you go regularly, you tend to meet the same artist year after year. And I have seen it just grow and grow and grow, and it now takes up all the bylanes. And there's no food. There's no. It's not a mela in that sense. There's no side attractions. It's just art, and
Nice.
it gets packed. Like by the evening, there's no space to walk. It's that good.
Wow.
And it's tomorrow, and I'm really really excited. We're going to head out nice and early, and yeah, I'm stoked for that.
Oh, that is very cool.
Yeah,
Huh. Chalo, then have fun there and see you guys.
right though. Bye bye.